Welcome back to Explain the Charts. Today is February 16th, 2025, and we're tackling the USDJPY pair. Recent news reports indicate a mixed market sentiment, with some analysts predicting further downside while others see potential for upside momentum. Concerns over potential reciprocal tariffs between the US and Japan have impacted the market's stability. Let's start by looking at the daily chart to see the overall trend. The daily chart shows a relatively sideways trend in the USDJPY pair over the past few months. We can observe some notable support levels around 145 and 150 and resistance levels at 155 and 160. Recent price action shows volatility with swings between these support and resistance levels. Now, let's switch to the 1-hour chart to look at shorter-term price action. Here, we observe a few key points of support and resistance, which correlate with the daily chart. Notice how these support and resistance areas often overlap across different time frames. These areas can be crucial for determining entries and exits. We can see clear patterns of price movement within these ranges. There are times when the price quickly retraces back to the support/resistance zone and then continues in its original direction. Traders can use such price movements to enter trades in the direction of the trend. Zooming in on the 15-minute chart, the price action becomes even more detailed. We're observing frequent fluctuations in the short term. However, we also see that price consolidations tend to occur around support and resistance levels. The frequency of such fluctuations shows the volatility of this pair in the short term. To summarize, we've observed a sideways trend on the daily chart, with key support at approximately 145 and resistance near 155. The 1-hour chart highlights a similar pattern of support and resistance, helping refine entry and exit points. On the 15-minute chart, short-term volatility can be used to capture quick profits. It's important to note that market conditions may change, and news events will influence the direction of the pair. For the short term, there is a relatively high probability of a retracement to the 150 area based on current market behavior. However, if the market sentiment shifts to bullish, we may see a continued price increase towards the 155 area. In the long term, the trend largely remains sideways. However, the 160 level is likely a stronger resistance zone that needs to be broken for a stronger bullish case. Keep an eye on further news developments regarding US-Japan relations and economic data releases, especially for the longer term.